Hello, folks, and welcome back to another edition of the Daily Crypto Byte. Today is Wednesday, October 27th. We're getting a little bit of a pullback here. CJ, I got to say, yesterday as we signed off the show, you're talking about the possibility of some liquidations. Seems that came to fruition this morning and brought a lot of the market down with it. That being said, there are a few diamonds in the rough here today that I think are worth taking a look at, including Engine.
Sheep.
And I don't know if I'd refer that as a diamond in the rough, maybe a cubic zirconium in the rough. But yeah, Sheep token also continuing its insane rip. We'll take a look at that as well. But I also want to take it a pretty interesting chart, look at an interesting chart, CJ, and that is crypto total market cap excluding Bitcoin. Because I think when we take a look at this chart, it's looking poised for a breakout. We've been showcasing a lot of cup and handle patterns. I think this may be one of the bigger cup and handle patterns we have in the space right now. So worth taking a look, and we'll talk about what that could mean for the space. But before we get started, how you doing on this Wednesday morning, CJ?
Doing good. I'm missing Dr. Liquidation or Dr. Doge. Maybe he'll join a little bit late. Nonetheless, yeah, what an interesting price action. We talked a little bit about yesterday and how you can look for signs of high leverage really building in the market. Today, I want to do that and go through some funding rates, specifically on Bybit.com. There's a lot of really good data there that you can check to see whether or not the market really is at risk of seeing a continued liquidation, because we have had a pretty significant one in the last 24 hours here. But yeah, I'm excited. I think there's a lot to take in today and a lot to look at. So yeah, I'm doing well, Monty. Thanks.
Like to hear that, CJ, and super excited for that information that you're about to share, because that is super important. I think that looking at not only those funding rates but also open interest has been really a driving force in this market over the last couple months. But also, we can look back at historically what we've seen when we see these spikes in funding rates or open interest and what that has meant to the market. So great stuff. Looking forward to diving into some charts today. But what do you say we get started here?
Yeah, let's do it. And I'm going to go straight into the funding rates before we actually hit the technicals. However, we are actually holding some support around 58, 59. So haven't fallen that much yet. Oh, but first, check out this chart. One of our colleagues sent us this morning. But very interesting parallel between Bitcoin and its current points, Bitcoin 2017, and then gold from 1970 to 1979 in that bull market. And interesting little confluence between the pullback that we've seen and what was experienced with these two assets. But nonetheless, let's get on to the funding rates. So first of all, if you have not heard of this before, funding rates essentially suggest that speculators, when the funding rates are positive, that suggests that short-term speculators are bullish and long traders are actually willing to pay funding to short traders. So they're that desperate to really get into long positions. And the same is true in the inverse. Sometimes we'll have short squeezes when the negative funding rates get really large. But overall, you can check this out at Bybit.com. Hit the funding rates up at the top there as well. And then we'll go take a look at Bitcoin right here. So we have Bitcoin price, obviously, and then we have our funding rates of either positive or negative. And when we first look at the charts, the thing that's most astounding to me is look at all the positive funding and all of the leverage that was in the market before Bitcoin fell down to 29K. That's ultimately a lot of the fuel that led Bitcoin to have a cascade of liquidations all the way down to 29K. Then after that point, everybody was bearish. All the short-term leverage speculators and the funding rates basically turned negative. You can see this massive spike down right here. That ultimately led to the mini reaction rally that we saw. And then, all throughout that time period, we had the whales accumulating. We had a lot of parallels in the Wyckoff schematics. But overall, the short-term traders were still very bullish. They were getting short. Like right here is a good instance as well. But all throughout this time, all throughout the downtrend, when we had the leverage shorts just stacking up, they finally got squeezed out of the market, once we went to 42K. And that's why we went to 42K so drastically, was because we had all of these leverage shorts in the market that ultimately were squeezed. Now we actually just saw the reverse. You know, we saw longs basically get squeezed out of the markets because, you know, ever since funding really neutralized here, that led for an authentic rally up into the high 50s. But then we started getting a lot more positive leverage, a lot more positive funding in the market. And that's what led to this liquidation. We had a ton of levered longs get stacked up. Then we had a drop in price of about a few $1,000s, and they were squeezed out of the market. And you know, we had to come down, and these funding rates had to reset to a more neutral level. But once you see those funding rates reset to a neutral level, it shows that a lot of the shorter term speculators are leaving the market, or are at least a little bit more neutral. But that's not what we've seen thus far. We still have quite a bit of levered longs in the market. Individuals still seem to be levering up even throughout this dip. So that leaves us a little bit of a little bit of risk of downside still, but nonetheless, this is very important to get kind of a understanding of leverage within the market and how we can interpret it going forward. And as you can see, we have had a little bit of a liquidation, but it was really nothing on the chart when compared to what we experienced in earlier September. So just wanted to shed some light on that. And before we get into the technicals, I'll just pass it back to you, Monty.
Yeah, CJ, that's great stuff. Thank you for sharing that and kind of explaining the nuance of it because it is very important. And yeah, that's interesting to note the amount of liquidations we're seeing this morning. And Bitcoin's price does seem somewhat resilient. I think that speaks to the amount of Bitcoin being locked away by long-term holders at this point in time. And there is a lot of leverage in the market, but it does not seem as significant as what we saw in May, like you mentioned. Real quick, I just wanted to mention this chart that I said at the beginning of the show, and that is the crypto total market cap excluding Bitcoin. I think this is an interesting chart right now because it's approaching a critical level, one of 1.5 trillion. It's pulling back today, obviously, as the entire market kind of turns back. ETH pulled back as well. But I think that the reason why this is worth noting is what this means, this critical level here for the crypto total market cap. And CJ and I talk a lot about Bitcoin dominance and what that means for the space. We kind of use it as a sort of volatility index. I think you can look to this, crypto total market cap. Also note this sort of cup and handle formation we have forming here. But I think, what's most important is this breakout level of 1.5 trillion and what that means to the space. So, historically, when we talk about, crypto, we're talking about mostly Bitcoin, all the way up until 2021. The crypto market cap excluding Bitcoin was really not that significant. It wasn't until the start of 2021 we started to see a genuine amount of, not just retail capital, but institutional capital, long-term holders start to speculate on more downstream assets, even beyond ETH, like assets like Solana, assets like AVAX, HBAR, all have seen incredible speculation, even relative to Bitcoin so far in 2021. And that's what this chart is telling us. Also, CJ and I have talked about the concept that Bitcoin dominance is going to fall over time as crypto matures as a space. It just makes sense that the only utility of, cryptocurrency is not Bitcoin's, just store of value. There's so much more, like the NFT market, like lending and borrowing in DeFi. All of that needs to be, factored into this market. And it is starting to be this year. So I think that when we look at this chart, we can see this $1.5 trillion level as sort of a tipping point for when, Bitcoin will begin to lose its dominance in the sense that people will begin to speculate into downstream assets with the same legitimacy that they do into Bitcoin. There's been a ton of speculation into these altcoins, but not until, this year, 2021, have we really seen legitimate institutional capital, come into this space, implying that it's not just a flash in the pan. It is here to stay. And, as we approach this critical breakout level here, I think that, looking at this chart, looking at Bitcoin dominance as well, paint the picture that now is a time to be looking to perhaps the altcoins. Today, looking at Bitcoin dominance, what we're seeing is a little bit of a bounce back, that may be surprising given the fact that Bitcoin is turning down so hard, but really that's to be expected when you have a liquidation event like this, the more risk on assets will be hit harder, and thus Bitcoin dominance will go up a little bit. But I also, this level of $44 is a highly critical level. Like I emphasized yesterday, last time we got a bounce from this level was the last time Bitcoin showed strength before getting that rotation of capital into the altcoins that saw Solana make new all-time highs, AVAX make new all-time highs, Atom, HBAR, and many, many more assets make new all-time highs during this period from August 10th to September 23rd. We're approaching that very similar level here. Take that in conjunction with the fact that we're approaching a critical level on Bitcoin's or on crypto total market cap, excluding Bitcoin. And to me, that implies that the alts are poised to have a very good close of the year here. So I just wanted to quickly share those two charts. I think they're painting a pretty interesting picture for the entirety of the crypto market here. But that's all I got. So I'll pass it back to you, CJ.
Thank you, Monty. That's some great stuff as well with the new perspective on alts. But yeah, let's get back to Bitcoin and discuss some things before we go into alts like SHIB and some other discussions around potential buying opportunities. Another thing last night, and we haven't really seen the full effect of this yet, but one thing that I had kind of noticed was that if you look at nearly every single major indice in traditional markets, whether it be Dow Jones, Diamonds, the S&P 500, all have really hit a TD sequential sell 9 and pretty much an inverted hammer candle, or kind of an inverted hammer candle at the top of an uptrend. So it doesn't mean we have to immediately reverse, but we had a very similar candle like this in earlier September on the S&P and some other indices that ultimately did lead to quite a correction. So we'll see if something mild kind of comes in the short term, especially with the Fed later today, and kind of interesting speculation that has been going around tapering and what we might see there. But ultimately, I think that pressure definitely did lead into the crypto market a bit last night as well, and is something that once kind of it ends, I think it might relieve a little bit of sell pressure on the market. But in terms of Bitcoin, I think something normal in terms of a regression would be something like to the moving average. I think that's our ultimate downside risk right now at about 56K. Being said, we are holding this previous support level right here, which is actually left from the previous lower high. So that's one of our critical levels right now at roughly 59K. You can see we are a little bit underneath it at 58. But overall, when you look at a lot of the oscillators, the one thing that is a little bit troubling is that, one, we still do have leverage in the market. It hasn't been a huge flush, but we have had a little bit of liquidations. We still have bearish momentum on the MACD. And historically, a lot of times is that once we've seen that bearish crossover, it has had to kind of revert to the neutral territory, or at least kind of this midpoint before going back and increasing. Also, when you look at the CCI, and specifically when it's on a shorter time frame or a shorter length, specifically 14, I like the CCI with that length, but we're not like that overbought in relation to our previous liquidations. Or excuse me, I should say oversold. We're not that oversold when compared to some of our previous liquidations. We are still holding that bottom level. So we'll see what happens, but I don't think we're necessarily out of the woods just yet. I think today's meeting with the Fed is going to really make things much more clear once that is resolved. But overall, I think we might get, ultimate downside risk here, roughly 55K. We have confluence between those Fibonacci levels as well as the 20 smooth moving average. So yeah, I guess that's what I have to say in terms of Bitcoin. Still kind of just sitting tight. I think we'll have a lot more clarity at kind of the end of the day, possibly during the Asian session. But with that being said, anything you'd like to comment on Bitcoin, Monty, before we move to some of the altcoins?
I just wanted to say, CJ, I think that, that scenario that you laid out there with a downside potential of perhaps 55K, I think that although might scare some people, in the interim, I think that that would be tremendous for the altcoins, because typically what we see is, Bitcoin make new all-time highs. We see that period of pullback and consolidation, and that's when we get that rotation of capital into the altcoins that I was just mentioning. So although that, pullback to 55K is still in the cards, I don't necessarily think that the alts have really that much left to pull back. And I'm actually going to segue that into, I guess, sort of my Doge of the day here real quick. Typically we pick Doge of the day based on signs of strength, like look at Engine today. This thing is absolutely ripping. The volume profile for me is what's most notable. Absolutely incredible volume. The best volume we've seen since June of this same year. We hit some resistance at this previous all-time high at about $2.30. And we're getting a pretty interesting candle here. I'm not picking this as my Doge of the day, but I just think it is worth mentioning. They're in talks actually with Valve and Steam about bringing NFTs into the Steam marketplace. So that's potentially a huge application of NFTs, something that CJ and I have been talking about for a very long time, sort of that overlap between in-game video game collectibles and NFTs. So I think that Engine is well positioned to take advantage of that, and we're seeing some price speculation on that today. But as for my Doge of the day today, I want to take a look at ETH, and I want to take a look at buying some assets that are pulling back a little bit, and I'll be looking to enter at some critical levels. Now, starting with ETH here, um, so CJ talked about the case of Bitcoin perhaps pulling back to 55K. If that were to happen, then perhaps 3,600 is a level that I would be watching for Ethereum. However, in the interim, I think one thing that's worth noting is this sort of upward trending channel that we've had forming. I know some people in our community have been highlighting it on the 4 hour. It also holds up here on the 1 day chart as well. And I think that this could be a potentially interesting level for ETH to potentially get a bounce from. This level of about 4K, we've been seeing a really interesting battle between the bears and the bulls here for ETH. And each time we've come down to retest this 4K level, they have relentlessly bought the dip when we come below 4K. So, obviously that has been happening while Bitcoin has been showing relative strength. Now that Bitcoin's showing some weakness, we may not get that same dip buying attitude with ETH. That being said, however, I think there are a couple good levels to be looking to be buying this in the in the interim. One being that level of 3,600. If we get a flush break below this channel, then perhaps I'll be looking to begin, increasing my long position here at around 3,600. But on the other note, if this channel does hold up and we get a bounce from this level, I will perhaps be looking to enter on a bullish engulfing candle, because all those things we just talked about, Bitcoin dominance, crypto total market cap excluding Bitcoin, also CJ's analysis of Bitcoin and what it could do over the next couple of days here. I think that actually bodes well for a lot of the altcoins. And the first, I think, could be the mover would be Ethereum. So I'll be watching ETH closely for a breakout. It is still right at this breakout level here at about, 4250. As you can see, we've been kind of flirting with this breakout level. Previous all-time high as well of the candle body close is right at this level. And I think if we get that consolidating Bitcoin and lack of speculation, lack of interest, people could look to ETH, and that could be the jet fuel to propel it higher into new all-time highs. So a bit of an unconventional reason why I'm picking it as my Doge of the day, but I really like ETH, and I'll be watching it closely to, perhaps dollar cost average into this one here. So that is my Doge of the day today, CJ.
Thank you for that, Monty. I don't have a specific Doge of the day today. I do want to talk about Sheeb and Solana, but overall, I would encourage you guys to look at the assets. If you're going to look in the altcoin market, look at the assets which have remained resilient and are not selling off, 10, 15%, but assets that are, holding their own and are only down about 3 to 5%. That shows that you have larger holders or holders within those assets that aren't willing to sell in just a mere shakeout in what we're getting in Bitcoin right now. But with that being said, let's get into some charts. Oh yeah, and one thing I forgot to share earlier, no one liked this tweet. There was like 45 likes. No, I tweet something bullish, you get like 150 likes. Everybody likes to be a bull, but no one likes bearish tweets when we're at an all-time high. And this one ended up being very reliable again, just through Bollinger Bands. The Bollinger Bands can always give you a clue of when to take profit or what would be an optimal time to take profit at the top of an uptrend. I mean, each one of these instances would have been a cautionary flag for that. But nonetheless, let's talk about some altcoins, starting with Solana. So these are our critical levels. We still have weakness within the oscillators, so I don't think we're necessarily out of the woods yet in terms of Solana, but it is one of those assets that has managed to somewhat hold its own. It's not down a huge amount. Ethereum's another one of those assets. I like Monty's pick with Doge of the Day as well. Being said, I think that we will probably be able to get Solana around 170 if we are to continue this downtrend to prior support levels, because there is a lot of support right here around the 60 to 70 level, or I should say 160 or $170 level. Don't want to scare anybody. But nonetheless, I think that any macro buy between 160 to 190 or 185 in Solana is going to end up being very profitable going into the end of the year. So I don't mind picking up some for the long term in those levels. Let's take a look at Sheeb, though, and just highlight some critical levels. I have nothing to say about this. I mean, I really don't. Just be careful out there. You know, the way that I would play this if I had some Sheeb is that obviously you can sell into strength. I would just wait to see weakness. And we have not seen any weakness yet. You know, if we are to get a bearish engulfing candle at the top of this uptrend, I would get out and just, you know, put it on the watch list, maybe come back later, but be grateful for this incredible run that you've had that was been, you know, really all speculative capital, nothing truly fundamental. But
Yeah.
yeah,
And you're right, CJ. I think this could be great practice for end of year, being disciplined, knowing when to identify that weakness, take some money off the table. Don't get caught up in the exuberance of it. It's very easy to do. But when you start to see that weakness, definitely take some profit, protect yourself. I think that skill set will be important at the end of the year as we're wrapping up this market cycle. So exciting stuff. Exciting stuff. As always, CJ and I will be hanging out in the crypto community, waiting for you guys, just drop by and chat with us. We got a global community of traders from all around the world, 24/7 chat, pro charting service, extensive education curriculum, and a whole lot more. Head over to marketrebellion.com/try crypto if you'd like to check that out. And as always, thank you to investvoyager.com for sponsoring this show. Head over there if you want to trade digital assets. They have 60 plus assets. You can trade commission free, earn up to 12% interest on assets like DOT and up to 10% on assets like USDC. And as always, use code Rebel25 when you sign up for $25 free in crypto. But that's all we got for today. We'll be doing a member webinar at 11:30 Central today. So if you are a member of the crypto room, drop by, ask us some questions. We'll be doing some TA and a whole lot more. But as always, thank you guys so much for watching. We will see you again tomorrow. Have a great rest of your day and take care.